I often get asked why trade penny stocks. In today's video, we're going to break that down. Be sure to subscribe and be notified as soon as one of these new informational videos hit. And also, let me know below, do you know anyone that currently trades penny stocks or has traded them in the past? Give me a yes or no below. So today we're going to talk about the top 5 reasons to trade penny stocks. I'm sure you're coming across this video, maybe you've done a Google search, maybe you've been looking around and you hear this term penny stock. Now, there's a common misconception. There are stocks that trade for 1 cent, even 100th or even 1,000th of a cent. But in traditional terms, a penny stock is any stock that trades for less than $5 a share. So just remember that when you're looking at stocks. A lot of the most popular penny stocks are the $1, $2, $3. So it's a little confusing. But anyway, the biggest reason we look to trade these is the extreme moves over a short period of time. You might have a stock that you like say Apple or Microsoft or Google or Facebook. These stocks take weeks, months, sometimes years to move 10, 20, or less percent. The great thing about the low price stocks, you can get 20% moves in minutes. We even see 100, 200, 300% moves in minutes, hours, or over the course of the day. So that is the number one reason to trade the penny stocks, the big moves and the ability to get in and out quickly. The second biggest reason to trade penny stocks is what we call liquidity, or ease of entry, as many people will call it. When there is a hot penny stock in play, some of them will trade 10 million, 50 million, 100 million, maybe even sometimes several 100 million shares a day. Why does that matter? That shows you that there's a lot of traders in and out. And as I mentioned in the first step, these stocks make extreme moves, big moves, hundreds of percent sometime. You need liquidity to get out when you want to get out. If you get stuck in an illiquid penny stock, it can be bad whether you're long or short. You want to be able to get out now. If you're riding a stock up for minutes, hours, or all day, if it quickly reverses, you need that liquidity to get out. So something to write down, a note to take: avoid any penny stock that's not trading at least 1 million shares a day, and that's the lower end of the spectrum. If anything, it should be 5, 10 million, or even more. The third great thing about penny stocks is diligence can be rewarded. And when I say that, you can really dig into these stocks and find an edge. As I mentioned, Apple, Microsoft, Facebook earlier, the thing with those stocks is you're up against the smartest bankers in the world. You know, Morgan Stanley, Goldman Sachs. They have guys that are PhDs, master's degrees, doctorates that are inside these companies, breaking them down, analyzing their financials. They know everything about these big companies. How are you going to compete with Goldman Sachs? You're really going to struggle. They got bigger guns than you do. The great thing about low price stocks is the big boys don't really care about them, and you can find unknown information. Maybe you find something in an SEC filing, maybe you get the press release first. You know, it's very possible. Using StocksToTrade, you could be one of the first people to see a new product announcement or a new contract announcement at 8 in the morning and be the first one in that stock. You're never going to know about the news first with something like Apple. Then, on the inverse side, a lot of these low-price stocks become amazing short sell opportunities. And just like you might be the first one to find the good news, you might be the first one to find the bad news. You could dig through those SEC filings, find some red flags, and you'd be the first one to spot that edge as a short seller. So that's one of the great things about the low price stocks. It's a small niche and you're not up against these huge investment banks. The fourth reason I love penny stocks is they create so many opportunities, both long and short. If you're not familiar with short selling, check out some of our other videos. We break it down in extreme detail. The great thing about short selling is you can make money on the way down as well. And I like to make the traditional penny stock pattern with my hand, and I mean it's the straight up, and straight down. The great thing about these stocks is they make those huge percentage moves on the upside as well as the downside. So if you're a long bias trader, you can target trading when the move starts, when the press release hits, when the earnings are announced. If you're a short bias trader, you can wait a few days. We call it like the day 3 rule, when the stock starts to have some profit takers and you can look to short the backside. Or if you're really aggressive, you can trade the front side and the back side. So that's one of the great things. You could trade one penny stock several times over one day, long and short. The fifth thing I love about penny stocks is the freedom that they allow. Every day, I mean literally every day, there is a low price stock that is moving. Lots of times, multiple. Sometimes, I think back to 2016, 2017, even early 2018, and now in 2019, we've seen it start to warm up again. There were weeks where we would have 3, 4 of these big movers a day. The great thing I love about that is you can come and go. One of the things I love about trading is it allows me to spend time with my family, with my hobbies, and I know that there's a high certainty if I take a day off, if I take a week off, I can come back, run my scans, do my process, and there's a high likelihood that there is going to be a low price stock moving. You don't necessarily have that luxury with the higher priced, air quotes, real stocks. You might show up ready to work today and there simply aren't any $20, $30, $40, $50 stocks even really doing anything. Or say the market's red on the day, if the market's fading, a lot of the bigger names, the real stocks I call them, they may just do nothing that day because the market's red. Penny stocks typically don't care what the overall market's doing. You could have a brutal down day in the SPY or the Dow Jones, and there might still be two big movers in low price stock land. So that's the last thing I really love about them is the freedom and I would like to say unlimited opportunity. Take a day, week, even a month off, and penny stocks will always be there. Thanks for watching our video. Be sure to comment below with any trading related question. We love answering your questions. Also, like and share with your friends, and be sure to subscribe to be notified as soon as our next video hits. And if you're looking to expand your trading knowledge, don't forget to check out all of our other videos, and be sure to click the trial below. Check out StocksToTrade. I think it is one of the best, most rapidly advancing softwares out there. Be sure to check out our trial.